Welcome everybody to my favorite time of the week. This is the Invest Answers Weekly Q&A where I answer your questions. And of course, spring is in the air, the skies are bright and blue, and the blossoms are coming out. So I thought it'd be a good time to come out and do this. The last couple of weeks have been too windy or too snowy or too cold, and you can still see some of the snow in the mountains up there in the background. Anyway, the first question is from Slane, and he says, will Bitcoin eat bonds? Very short and simple question. And basically, historically, people always spoke about the 60-40 portfolio, which was 40% allocated towards bonds. Most good money managers today would not allocate so much. We are in an inflationary environment, and during that time, of course, bonds lose value over time. So it's not a cunning plan to have investments in bonds. But just as a little bit of a corollary, if you look at the gold versus crypto world, I'm not saying bonds are gold, but over the last 2 quarters, $20 billion has flown out of gold and $7 billion has flown into crypto. So I expect some type of similar type of thing to happen, and there's a lot more value in bonds than gold. I think the total bond market value is about 200 trillion. So it's massive. And also when you look at the world today, 120 trillion of those bonds actually have negative yields. So people are going to look for an alternative. And what is the best performing alternative we've seen so far? And that, of course, is Bitcoin, the same place that all roads lead to. So not saying that everybody's going to ditch their bonds overnight and move, but I think a small fraction definitely will be, to the tune of maybe 5% over time. And thanks for the question, Slane. Second question came in from Terrace Dodds. What prevents Bitcoin from being manipulated like everything else? Stocks, commodities, precious metals, etc. Well, before we talk about how it's manipulated through paper, and I think in that same example you mentioned the fact that there's something like 50 times the amount of gold is traded on paper than actually exists in real life. Well, the way the derivative markets work, for example, I'll give you an example of a crypto manipulation. Imagine somebody wants to borrow $50 million worth of Bitcoin at a 5-to-1 margin. That'll give them the power to move about $250 million of Bitcoin. Now, they could use 10 million of that Bitcoin margin to build a $50 million short at, say, 59,000, where it is today approximately, 59,500. And then they could dump about 4,000 Bitcoin on the market. And that would force the price to fall and for longs to be liquidated, especially those that are on margin, trading on margin. And then what they do is they jump in and cover their shorts at maybe like $57,000 and buy back their short position. And that's how they can make money real fast. Now, the regulation isn't in such a place right now to be able to stop this from happening, so that's going to continue. But as long as you're holding onto your stack and you're not on margin, you're going to be safe. And these manipulation games will always happen. But again, the regulators cannot prevent it. For example, if you look at just what happened with Archegos Capital Management lately, that shows you that the regulators are sometimes sleeping at the wheel and they're not in a position to solve these hard problems. So again, as people always say, just hodl, be safe, and everything will be fine. And these manipulation games will always continue. But just buckle in, as I always say, for the hard ride. Okay, third question of the day is from Alana Evelyn. Will Robinhood ever let you download your crypto? That's a great question, and I know a lot of you have Robinhood and you've purchased your first crypto on that platform. So the CEO his name is Vlad Tenev. He's been under a lot of pressure to clean up his act and build up the reputation again of Robinhood. And he has promised the market, in fact, as recently as a couple of weeks ago, that he is bugging his developers every day to develop a wallet so people can actually download their crypto as quickly as possible. And he also wants to attract more crypto investors and wants to be more like, the Squares of the world that allow you to download your crypto. So I think it's coming. I don't know when. It could take another 6 months or more, but I do hope that Robinhood do that. So thank you for your question. Question number 4 is from Annika. You bought stocks like Palantir. Isn't it better to buy more crypto rather than stocks, considering inflation is looming? This is a very interesting question. Yes, I do say inflation is looming. And yes, I do believe in crypto. But at the same time, let me give you a simple example. Having all your eggs in one basket sometimes can be dangerous, so it's good to diversify, and it's good to diversify into very disruptive winning stocks as well as we go forward. So if you take, for example, Bitcoin at $60,000 a coin, if it doubles to 120, you're just doubling your money, you're 2xing your money. But using things like my options play on Palantir, if Palantir goes from $21 to $40, I can get a 10 to 20x on my initial investment. And remember, for Palantir to go to $40 is not unheard of. It was actually at $44 on the 28th of January. So that's the way I kind of look at it. I like to use options and leverage, not for crypto, but for equities. And from that perspective, things can work out really well. So thank you for your question. Again, it's good to have a portfolio of winning stocks, not, again, all your eggs in the one basket. Okay, so the fifth question is from Brooke Ashley, or Ashley Brooke, I'm not sure which one that is. Say, considering the deflationary value of money in a savings account, how risky is it using Bitcoin as a savings account? What would need to happen for this to be a safe move in the future? So that's an interesting question. So back in March and April 2020, when I saw all the money printing that was going on, and I saw my fiat in my bank account, and my bank was paying 0% interest, even in money markets accounts, paying 0.001% interest or crazy stuff like that. I started using Bitcoin as my piggy bank. Every bit of fiat I had, I pumped into Bitcoin. And from that perspective, it made a lot of sense. At the same time, Bitcoin as well can be, if you look at some of the returns, you can make 5 to 10% in 5 to 10 days on Bitcoin. But you always have to remember there's always a bit of downside risk. So think 1% risk of your money. So if you put, say, $100,000 of your savings that are getting nothing in a bank account and you put them into Bitcoin, there's that 1% chance that Bitcoin could go to zero. So always bear that in mind. So it's good to be diversified and not have, again, as I said before, all your eggs in the one crypto basket. But yes, it's definitely a good hedge against inflation and a good piggy bank to have. And I do it myself. Okay, sixth question is from Don Alvis. I dreamed of having a whole Bitcoin. Now I dream of having 2 whole Bitcoins. How do you manage having sustainable approach versus greed? Again, I hate to use it seems like a lot of Bitcoin questions are coming in, which is great. That's what you were all interested in. But again, having all your eggs in one basket is not good. Don't plow everything you have into Bitcoin for that 1% risk exposure I mentioned in the previous question. Now, what I did was, back in March last year, when I saw everything happening and I started imagining the bullish scenario for Bitcoin, early last year, I thought Bitcoin would definitely go to $113,000 by the year 2030, based on everything that I saw. How wrong I was. We're halfway there already, and it's not even a year later. So from that perspective, what I did was I estimated the number of Bitcoin in my plan that I wanted to own for retirement in the future. And I came up with that number, and that number was based on kind of what I calculated to be my future expenses, the time frame I was looking at, and the future value of what that set of coins would be worth 10 years out down the line. And that's what I did. And I came up with a very specific number of coins, and I worked towards achieving that, and I did that. And at the same time, I continued to accumulate, even at these prices. So what's very, very important, though, is you're dead right. Don't let greed get in the way. Don't become obsessed with Bitcoin or stacking sats or accumulating. Just be mechanical, be without emotion, make a plan, decide, say, I want to have 13 Bitcoins, or I want to have 3 Bitcoins, or 23, or whatever the case may be, based on you and your family situation and your plan, and then work back into that and then make it happen. That's what I recommend. And that pulls all emotion off the table. Thank you for the question. So Jessen, this is a question. Do you have a trading versus hodl portfolio? And how are you going to approach taking profits during this bull super cycle? So when it comes to Bitcoin, it's all hodl for me. And what I plan to do with things like Bitcoin and Tesla and a few other names, I plan to hold them very long term because I believe the future is very bright long term. However, I'm very good at identifying tops and bottoms. So when I feel we are at a top, I will do what I always do. That is sell an out of the money call or a future against my long position, and that way I can hedge at least some of my bet. Now, a lot of people are talking about super cycles and everything else. So imagine Bitcoin goes to $200,000 and I hedge. And it goes, and I hedge to the tune of 30 or 40K of a hit I could take. And if Bitcoin goes all the way down to 100,000 again or 60,000, I'll still be losing, but I'll still be holding because I know long term the future is up and I'm in a position to ride out the storm. So yes, I hold, but I do the same thing with Tesla and a couple of other names as well. So I hope that answers your question, but basically leveraging those futures and derivatives and options to hedge my bet and cover myself is very important. But going back to the big macro story, remember, JP Morgan's just coming in, Morgan Stanley is coming in, BlackRock is coming in, and I remember hearing Raoul Pal, he spoke about a bathtub with elephants getting in the bathtub. And remember, the fascination with Bitcoin is about the scant supply. It's all about supply and demand. Demand is going like this, and supply is going like this. Just like the coins leaving the exchanges. That is the story, and that's what I want you all to remember, and that's why I'm hodling long term. Okay, the fun question of the day is from Sir Larry Wildman. If you found a hair in your meal in a restaurant, would you complain, or what would you do? So this is a very interesting question, and I've been in situations where certain things have happened. And first of all, if it's just a hair, I'll pick it out and continue. I'm not worried about that with COVID or with that or anything else. I know if something is cooked, it's a hair, who cares? Now, there are some things that are gross, which I won't get into. And if that would happen, again, just like with the hair scenario, I would pull it out and make no fuss and just continue. Or if it's something gross, I would stop eating, again, make no fuss and continue. Now, if the waiter or waitress asks me why I stopped eating or didn't eat my food, I'd politely explain. And if they didn't charge me for that meal, all the money that I would have paid for that meal would be added on to the tip for the waiter or waitress as well. So, because it's not their fault, and I like to, make things whole. So that's what I would do. But one thing I'd also do is I would never return to that restaurant. If I had a gross experience, if it's a hair, that can happen. Could even be one of my own hairs falling into the food and I wouldn't even know. So I hope that answers your question. And thank you so much. A lot of fun as always. I love doing this and glad to be outside again and keep those questions coming in. Thanks all. Take care. Bye.